So we have a question on gold, if we should sell gold. Our bias is always to long gold, actually, unless the macro fundamentals, the big fundamentals we're looking at, change. And none of these big fundamentals have changed. Big fundamentals here are the possibility of a war in the Middle East, the possibility of further escalations in Europe because of the war in Russia, and overwhelming or the possibility of continuation of poor economic global performance. All are pushing gold prices higher. We broke the market high today. So we shouldn't show the market when you break the high. When you break the high, you add to your interest, really. Okay, so why are we breaking the market high? We have to resource the why. Maybe someone said something. All right, but we can consider we have broken the market high. We're looking at this 15-minute yesterday, and we did emphasize that we're just doing a correction for. Remember, we're doing this shoulder level at the neckline, and that we did say that every time we get to that neckline, we fail because the fundamentals are still in doubt that they are risk adverse, strongly risk adverse. This time around, the fundamentals are no longer in doubt that this is a strongly risk adverse environment, and so we have the breakout. It was expected yesterday that we still had a 4A, 4B, and a 4C. Well, the market apparently heard us and decided, no, sir, they're not going to do a 4C. They just take it off. Maybe many people are selling at that level, so the market is hunting stops. This is what we're looking at today, really. And it was still, technically speaking, if you look at this chart, it is possible you have a 4A, you have a 4B, and you have an A, B, and a C. And it was possible that after attacking the neckline, we could do re-entry if you wanted to join the market at the shoulder levels. You have shoulder here, inverted head and shoulders, or a double head, deeper head levels. Remember, our bias yesterday was that if you have the longs even higher up, 2,470, hold them. Hold them, because when you take out, you close out the long, the market takes off, and we are left behind. And this is what we're seeing right now. So I hope we haven't closed out any longs, because we're going to be holding this until the end of the day. We will also hope that something risk adverse occurs today so that we get good profits. All right, towards the end of the day, we take a half size profit, hold the remaining size across the end of the week. If you see gold going up without geopolitical breakouts or geopolitical news announcements, then someone knows something is going to happen across the end of the week, and is, of course, making use of that information by buying into gold. We follow the flow. We do the same. At least that's our take on it. All right, let's check the momentum. I believe we have a breakout. That is the breakout level, level 3. We should have a breakout, and I believe we do. So 4C comes in here. Let's check first high degree if we see a trigger or get a trigger. We can't yet tell on the 30 minutes, but we have a very strong momentum spike. Take it to 45. Same. One hour. The same. We have a trigger on the 2 hours. We have a trigger. Why consider this as a trigger? Because we are having higher momentum indentation. So I'm referring to this. We have now a bounce out of this level, and The last intention was a level 2 at this point, I guess. Where you have the arrow, this one is higher, so we have a bounce out of a level 4 out of this level 2. We are actually aiming for A4, B4C, right? So this is correct. And amazing, there is a very small neckline here, very small. If this is correct, if the current breakout will hold, it should never fall below that neckline. And this means if we are not in the market, if we have good profits at hand at this point, would like to collect money, for instance, to make sure that we have created the desired yield, we are able to close, we are able to long market, and we are able to have a hedge to protect 2,450. We cannot fall below this point. 2,440, I can even go a bit higher, exactly below this point. 2,450 is the protective hedge. Re-entry is market if we are not in the trade. If we are in the trade, we will just take profits and all right, we'll just take profits towards the end of the day, redo the trade, go, at least on a half size going into weekend. Let's take it to 4 hours. Same trigger, excellent and good progression. The day, of course, is positive and everything is strong on the day. Very strong. You want to check the candle structure. We all remember this chart, and we have it, of course, on our own analysis. This goes to 2,580, 2,570. This goes to 2,580. One, it's the end of level 3, it's the end of wave 5, it is the higher boundary of both ending diagonals. The micro and the macro ending diagonals both point to that level. So this is the micro ending diagonal, or the accelerating ending diagonal, and there is a macro structure here, dotted white. Though this is the most possible, and we, of course, if we're going to hold the position across the end of the week and this gets seen and retracts, we're looking now the dotted lines, this, and this is no longer there, or this is the subversion, what could happen. But primarily, we believe this very strong move should happen. The one in outline should happen to create a head that is away from the shoulder levels, higher than the shoulders. Otherwise, there is no need for a breakout. And we're seeing a breakout. So we would want to hold a trade across end of the week, at least on a half size, or at least take the profits towards the end of the day. Redo the trade towards the end of the week on a half size, hold it across the end of the week. We will not attempt shorts at this point. We clearly see, let's check now the feeds, smaller feeds. So we clearly see good positive momentum on the 15. And on the 5. All right, let's move on. If we are not in the market, we do the long again, and the hedge is just 2,450. We remove the hedge before the end of the day, and the target is open. If we get to see good profits before the end of the day, take profits, and we do the trade before end of day. So gold is a buy, it is not a sell.